Hey, my name is Jason Nicholson and welcome to my YouTube channel. In this video, I want to talk about one of the biggest lenders in the country that is significantly improving or making it easier to borrow more money from them. They're lowering their stress tests, something that came in the 2008 financial crisis. And the government is pushing lenders to lend more money. Now, this is going to have a big impact on house prices and the property market as a whole. And we're going to dive into that, how much you could now borrow compared to what you could borrow before, and much, much more. Now, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 42,000 subscribers. We're a smidge away from that. We could even hit that today with your help. So please do make sure you do that. And let's get some more views on this video. How do we do that? Simple. Smash like, tickle like, do something to the like button. That really helps with the YouTube algorithm and massively helps the channel grow. So thanks to everyone that does that. So the Financial Conduct Authority, which is part of the government, has, in a strange thing, have asked lenders to start lending more money, to give people a more opportunity to get onto the property ladder. Now, that could be down to a few things. The market has slowed down significantly, and the government wants sales to continue because stamp duty for them in the first quarter this year was a big jump in income for them. And so they want to keep that going. And right now, the property market is really tough. Now, before 2008, money and banking and mortgages, it was the Wild West. I had mortgages where they were called self-cert mortgages, and hundreds of thousands of people, if not millions of people, had these same mortgages where you went to the broker and you told them how much you earn. Now, some unscrupulous brokers increased that a little bit, and it allowed people to get bigger properties than maybe they would have if they weren't able to do that. And also you had mortgages back then that were 110% of the value of the property, meaning you bought £100,000 property, they lent you 110 so you could do improvements. But a lot of people took that extra 10 grand cash back they got and bought cars and holidays, and then it all came crashing down. So when banks started to fail in 2008, it got a lot stricter lending criteria, and that was good. And that is what we have today. If you've tried to get a mortgage since 2008, you'll know how much they actually check you out. And that has meant that we haven't had a house price crash since then. So what lender is looking at doing this or is doing this? Well, it's Nationwide, who are one of the biggest lenders in the UK. They've got a couple of brands. They've got Nationwide and they've got Virgin Money as well. So there's two options there, and they're going to roll this out to both. So the government, as I said, is pushing lenders to relax their criteria somewhat and lend more money. So what's the current criteria with Nationwide? Well, whatever rate they give you, you're stress tested that you can afford it at 2 to 3% higher. 2 to 3% higher interest rate. That doesn't mean the payment went up 2 to 3%. It means the interest rate went from 4% to 7%. That's what they're stress testing you. So if they give you a 4% rate, they're testing you financially to make sure you could still afford that at 7%. And that's why, while repossessions have gone up, they're nowhere near the level that they have been in times gone by when we've had the 2008 crash, because people were stress tested prior to getting the borrowing that they've got today. And lending did go up to 6.5%, and people were stress tested at that level. Some would have found it hard and not been able to afford it, but on the whole, most people did keep their properties. So what are they dropping it to? Well, the new range that they're dropping it to is going to be down to 0.75% to 1.25%. So that's a big difference. And so what that's going to mean is a lot more people that apply for mortgages with Nationwide that wouldn't have got approved will now get approved. So they gave an example on what that would mean on a couple or a single person that earns £75,000 and how much you could now borrow. So 75k salary, either single or combined. Previously, you would have got £307,000 as your maximum borrowing. That's not bad. But this has gone up significantly now, and it's gone up to £336,000. Now, it isn't just Nationwide that are doing this. Other lenders are either doing it or have already done that. Lloyds have relaxed their stress test, NatWest have relaxed their stress test, HSBC and Santander have done that. Pretty much all lenders are likely to follow suit because they want to lend money. They were gung-ho in 2008 and they wanted to do that. And they made a lot of money before everything did come tumbling down ultimately. And so this means in this scenario, people can now borrow, and this is an average house price, people can now borrow £29,000. Now, why is that important? Well, stamp duty has gone up significantly. So maybe they could reduce the deposit size, and that would give them that option and use that money for the additional stamp duty that they've now got to pay. It gives people more options. Things like this are going to keep the market moving for a little while longer. You've got things like interest rates dropping, you've got stress tests dropping, and these things need to happen in order for the market to somewhat recover after a slow period that we're in right now. So I think that you're going to see this rolled out pretty much to all lenders. Buy-to-lets, this doesn't really count because buy-to-lets are an unregulated thing anyway, and a buy-to-let mortgage, you can get a buy-to-let mortgage with CCJs, you can get a buy-to-let mortgage with no income. What they're more concerned about in that scenario is, does your deal stack up? So this won't impact the buy-to-let market too much, but it will impact the residential market significantly. This is open to first-time buyers, remortgagers, movers, and people of all ages. Now, other things that they've also got to reduce the payments, and you're going to start seeing more of this, is Nationwide have some 40-year mortgages now. When we started the channel, that wasn't very common. Now more lenders are starting to do that. What that means is that your monthly payment will be reduced. So that helps people with affordability as well. The stress testing is getting easier. So this will mean more people will come into the market, and that's what lenders are trying to do at the moment. I've done a video earlier this week where I talked about we've got a huge increase in listings on Rightmove at the moment, but not the buyers to back that up. House prices and asking prices are at record highs. And so in order to keep that going, you're going to need to do something to stimulate the market. And this is something that might just do that. What do you think about reducing stress tests? I think that they have been a little harsh, but I also think that we shouldn't go back to the reckless lending of 2008. So I think this is a positive move. Personally, I don't think they should go much lower than this. Because I think people should have some sort of stress test in order to make sure they can keep their payments if something bad happened in the economy. Anyway, let me know in the comments below what you think. Do smash like, do subscribe, and check out all the other videos as well on the channel, including this video right here.